Miami real estate should be local. If your realtor can't show your real estate in a golf cart, this is probably not the neighborhood they specialize in.
And thank you for joining us. And if you're looking for a mortgage, we got a guy that's going to be able to help you out. Hi, I'm Michael Miller. Our guest today is Giovanny, the Mortgage King Mirabal. So first of all, thanks for being here.
Thank you.
Okay. I just want to know, Mortgage King, tell us about that name.
Man, I actually came up with the name Mortgage King. I was talking to a buddy and I was just thinking of something catchy. And he said, man, you want to have mortgage in front of it because when someone types in mortgage, maybe your name will pop up. You know, if they're looking for a mortgage, maybe Mortgage King or mortgage, whatever. I thought of Mortgage King because I am Christian. Christ is my king. At least that's how we operate it. And if you look in history, the best kings are the ones who actually serve the people better instead of like just being selfish with selfish motives. You look at the great Roman Empire kings, the ones who thought selfish without the intentions of helping people, putting their needs before their own, those kings crumbled and failed. Yeah. And so I like to take that into my business, Mortgage King, because not because I'm high and mighty or boastful, but Mortgage King more for me just being a servant.
And it catches your name. If you didn't have that in there, we wouldn't be talking about it. And because there's some history in there for you. And when we see that, it puts a smile on people's face. It makes them think for a second, like, wow, maybe I should talk with this guy. So Giovanny, at all the fields to go into, why did you get into the money field, the mortgage field?
That's a funny question. No one's actually ever asked me that. So I got into mortgages really because obviously I was trying to find a career that I loved. And since little, it's actually funny that you asked this question. I've always learned how to count money way before I knew how to read, way before I was interested in playing with toys. My dad just always had money. This is back in the early 90s. I was born in 1992. So cash was still a thing. And my dad always had money on his drawer or whatever. I still remember the smell of money. And so I figured since I've always been good with money, and I actually always have been good with money since a little kid, always had some savings and my mom always...
How little were you when you recognized that about yourself?
I would say around 7 or 6. Mm-hmm. I would actually, me and my brother had a bunch of these toys that we didn't use anymore. Instead of giving them away, we actually put them in front of our house, which barely had anybody walk in. And we were like, hey, let's sell it for some money. And we did. We actually had like random people come and sell it. So I've always had this entrepreneur type of spirit. But always when I got that money, we collected the money. I was always trying to figure out where can we save it? I don't want to spend it. And I was always just interested in that. Maybe around like 6 or 7. I remember selling my Pokemon games that my parents got. My mom got mad once because we did that.
And there is some training that has to go on the human brain to understand how money works.
Right.
And I certainly don't have that. But I have friends, I have family members that understand how that works, that have a lot of respect for it and understand the good that you can do with that besides taking care of your family.
Right.
So get in the mortgage business. You remember your first one where you said, Mom, Dad, sister, brother, I just closed my first deal. Tell us about that.
I do remember that first deal. My first deal ever was a cash out refinance from a girl who was, I remember her name. I don't know if I want to say it.
Don't say it.
But I still have her on social media. But this was way back in 2016. She was doing a cash out refinance on a condo. Condos are very difficult in general. So she was denied by her big bank, which was BOA. And so, she came to me through a referral of a real estate agent. Hey, Gio, can you help her out? I had a conversation with her and I said, we do these all the time. That was my first deal where I originated it. I was actually in the mortgage industry before a loan officer and I was wanting to be an underwriter because it was more of a stable career field for me. There wasn't any sales. It was a salary position. You can make like $100,000 a year potentially as a mortgage underwriter. So that's where I was at. I learned a lot from trying to go that route, but a lot of people convinced me to just go the loan officer route. And I ended up going the loan officer route. So when I had the conversation with her, she was still like, no, it doesn't seem like it's possible. And I told her, you got to trust me. All we need is to properly document this condo and you can get your cash out refinance and you can do your thing. We closed it.
Good for you. And let's talk a little bit about when people go and they want to cash out or they want to get a new mortgage, sometimes people are like terrified of doing it. That's number one. 2, disclosing to this young person sitting across from me, here's all my finances.
Right.
And which there's an old saying, people would rather talk about their sex lives than money.
Yeah.
Right?
Yeah.
And because it's something that we hold close to our chest, and we do this. So here they come, they see an ad or they know somebody, they go over. And what are some of the questions that you need to get together for them so that you can go to, because you go to lots of different lenders. You're not stuck on just going to a particular bank. So what are some of the things that, I know it's uncomfortable for them, but what's the minimum basic things they need before they even go to you? They're going to know they need.
I can tell you've been doing this for a while. It's a really good question. I can tell you've done your research because we do shop with multiple lenders. And so what I typically do is I'll have like a simple conversation just to see if we can go to that next step of actually doing an application and checking those lenders. What I typically ask is your work history. Are you self-employed? Are you a W-2 employee? How long have you been doing that for? What I'm trying to do is document 2 years of work history. Doesn't have to be with the same employer or anything. We can kind of stick them together. If they got 2 years work history, we can work with that. I also do want to see like, hey, where's your credit at? What I'm trying to see really is, do they have a credit score of 580 or higher? Because if they do, they could potentially still work on an FHA loan. FHAs go all the way down to 580. They can actually go to 500, but that's going to require a higher down payment. Very rarely does anybody go that path. And then the last question is, do you have money saved? What are you going to use for your down payment? Do you have plans for your closing costs? Do you want to use down payment assistance? Do you not want to use down payment assistance? And then once I figure out like, hey, they do have cash for this transaction, their credit's decent, they've got 2-year work history, let's go ahead and take an application and see what the real numbers look like.
I used to get mortgages when I was much younger, and it always seemed like they knew the next form they were going to ask me for. They already knew it, but they were waiting till I had the first ones done.
Right.
Is that an old thing? Don't overwhelm the client, because lots of people tell us, I get overwhelmed with all this paperwork that I get buying a house or a car or whatever it happens to be. So tell us how you move them slowly so they don't like go, I'm done, I can't fill these out anymore.
So what I typically do is after that conversation, I'll send out the application to them, and it's a digital mortgage application. It's not like back in the day on the phone, which we used to do that in 2016. But now it's an application. They take it. They'll send me their supporting documents. I'll go over everything with them. Hey, this is what your down payment is going to be. This is what you can expect as a monthly payment, depending on the type of home you want to purchase, the loan amount. And then I'll get to the underwriting stuff. Because I mentioned earlier, I used to want to be an underwriter. I like people to think of it as the underwriter is the judge, and I'm just the attorney. I'm just going to present this, but the judge ultimately is going to give the say. And so because I know what the judge is thinking, I'll gather everything up front. Hey, look, I understand you have these addresses on your credit report. We're going to go ahead and explain these now. I see these inquiries on your credit report. Let's explain those now. There's a deposit here in your bank statements. And that's how I work it. And I do it all in the initial pre-approval so that they don't get overwhelmed. So by the time I do send that file into underwriting, everything goes smooth.
So you gather the stuff, the good stuff, and you try to address the stuff that's not so good.
Right.
So that when the big boss upstairs says, "Hey, what's this about?" you'll be able to defend the position of your client, which is, I think they can do this.
You got it.
Let's talk about people that have had, they're in the middle of a divorce, or they just got a divorce, or they live in a condo then the whole condo building's got a problem with it.
Right.
So divorce is pretty common. 50 to 60% of the people get divorces. How does that impact somebody's credit score and their ability to buy down the road?
It depends really on the loan program. Each program has their different ways of handling it, and depending on the actual client situation, I would know which route to go. But typically, if you're planning on going through a divorce, I would suggest finish the divorce before your new purchase. Oftentimes people would say, hey, I'm going through a divorce. I don't even want to live with her anymore. I just want to buy this new house and then we'll handle the divorce later. It's the wrong way to do it, because now that house you just purchased is going to be part of the divorce. And so I always say, hey, get rid of the divorce, get through with the divorce, and then we'll focus on your purchase. Sometimes you'll have a spouse who stayed with the property, didn't make the payments on the property or the vehicle, whatever they co-signed for, and it affects the new buyer. With a quick explanation, a divorce decree, and everything explaining the situation, if you explain the file to the underwriter, who is a human, it can make sense. But some loan officers are lazy. They'll just send in the file. They'll make the underwriter do all the thinking. They make the underwriter put the pieces together. And their job is literally to pinpoint falsehoods to deny the file. And so you're leaving that to the underwriters.
And it's not so much different than if there's somebody on the staff or somewhere who's trying to get something done with the boss. If he brings lots of evidence to support his position, hey, this is what's going on here, it's easier for the boss to go, oh, okay.
Right.
Easier to get forgiveness than permission, the story is.
Exactly.
And let's talk a little bit about condos because since it's been 5 years since the Surfside collapse and 98 people perished in that.
Yeah.
So the rules are a little bit different for the condos as far as how much money they need to have on hand and the inspections. And then the people that are living in them, all of a sudden, they go, gee, I wasn't expecting this $50,000 special assessment.
Yep.
Can they go borrow that money to pay if they don't have that? And what form of mortgage would that be?
The only way I would think that they would be able to do something like that is by way of like a home equity line of credit. But still, even when you apply for a home equity line of credit, or if you want to pull equity out to pay the assessment, the condo still has to be approved, right? The actual collateral still has to go through everything that it went through before. Before the Surfside collapse, condos were already difficult. They had a separate approval, a separate way of getting approved as opposed to a single family or a townhome. After the Surfside collapse, it strengthened even harder. And what I see is happening actually is condo values are dipping a bit because of this. It's harder for anyone to either refinance or sell that condo. But the assessments, that's probably I've always wondered, as a mortgage guy, I always wondered, how can they just put on an assessment in such a way that they did, where now homeowners who had to apply to purchase this, and they had a specific debt to income ratio that they needed in order to actually get the mortgage to purchase this, now they get dumped now they have a higher debt than when they went to apply.
So
it's just a mystery.
Most of the condos now, I think, have to have inspections every 10 years.
Right. They add
after the initial one. So if you buy a condo at year 7, in 3 more years, you're going to get it.
You're going to get it.
Right? It's coming one way or the other, because that's the way business is done now. Yep. And I see that the escalation of prices pretty dramatically.
Yeah.
So that means a lot of people got a lot of equity, which they didn't have before.
Yep.
In your field, things, whether you're handling them or other people, have there been more applications for people trying to borrow money on their homes than before, or is it all about average?
What do you mean by it's before all about average?
Let's say 5 years ago, if they were living in an $800,000 home and they had $200,000 in equity, and compared to now, they're living in the same home with a $700,000 mortgage or equity, and the house is now worth $2 million. Are a lot of people going to grab that equity out now?
Yeah, we're seeing that a lot more with investors as opposed to homeowners who are using the property as their primary home. Because investors can tap into a lot without having to show that they can pay it. Investors can just show that my renter can pay the mortgage, and so it's easier for them to pull out that equity. Typically, if you bought a home for $700,000 and you had a set salary and a set job, let's just use a retired person for example. A retired police officer will say he bought a $700,000 home, and now it's worth $2 million. Would he, with his retirement income, be able to show that he can pull all that equity out, still afford the monthly payment with only using his retirement income? The answer is probably no.
In the old days, you were pretty young then, they were liar loans, right?
Right.
Where the banks didn't care.
Yeah, no doc loans.
Yeah, it was just like you just say it. Is that the way it worked? And they
stated income. Yep. Before I got in the industry, that's something everybody would talk about. Man, we miss those stated income days. You could just call and say, yeah, I make $100 million a year or whatever it is. Well, there you go. Bingo, you got your mortgage. And we know what that did to the economy.
Yes. All right. So let's talk about the number of applications that are being made, across the country or here in Florida. Are they about average what they've been, or has there been an increase or a decrease recently?
Well, there has been a decrease nationally. It's always different depending on the loan officer. For me, it hasn't decreased just because I work with financial planners. I work with divorce attorneys. There's always divorces going on. There's always someone passing away. There's always something happening. But just off of like when you compare today with what was happening in 2020 when rates went down to 2%, yeah, those applications slowed down a bunch.
So there'll be a point soon where we won't refer back to those mortgages at 2% and 3% and 4%.
Right.
And people, even at 3%, it's going to go lower. I go, so if it drops 1 point, I said, is that going to be the difference? You're going to keep waiting? And that's certainly one of the things that from when people are buying and selling homes, where people have to make a decision. Am I going to wait for mortgage rates to go down?
Right.
Right? Well, they're sort of like this now, right? They go up a little bit, they go down a little bit.
They go up a little bit. They're always going to change. And you're always going to be met with two different positions. It's, do I want to wait for rates to go back down to 3%, let's say, and then go out and purchase a home? That's what happened in 2020. And what did we see? We saw that there was tons of bidding on homes, right? You'd go to make an offer on a $500,000 home, and there's 30 people also making an offer because everybody went to apply.
That was common.
Yeah. Everybody went to apply for that 3%. Now that rates are at 6 and 7, around there, the buyers slow down, but the applications slow down. But now you're going to have to. But now you have the chance of actually getting a seller to help you with your closing costs.
So if you know offhand, and if a rate goes down by 0.25%,
right?
Let's talk on $100,000. How much a month difference is that?
Dude, we're talking maybe $50.
Yeah, something. How much would it have to go down before that would push you to go do that? I don't know that's going to happen anytime soon.
I don't think so either.
And it's just, hey, this is what it's going to cost. Figure out if you can do it. If you can't,
Yeah, it's either you're going to buy with lower rates and higher prices, or you're going to wait for rates to drop, and then you're going to compete with these sellers and all this kind of stuff. Compete with buyers.
Yes.
Yeah.
And we see that I know people that are in the real estate businesses, that there's a lot of competition to buy houses now, right? Where a lot of bidding that's going on, remarkable, right? To see that change, I don't know if that's just in Miami, but we have so much money that's coming here in Miami, and that's good for the economy. And if you're not quite a middle class, it ain't so good.
Yeah.
But it's just the way that stuff flows out. And that's not changing anytime soon.
I don't see it changing.
Yeah.
I don't see it changing.
So in your field, how do you wind up finding new prospects and new customers?
Typically through my past clients. Past clients are a big one because people know people. The way I see it, everybody is typically a client. If you go to like a different company, let's say if you're selling food or haircuts or something, you got a specific client, everybody wants a home. So what I do is I talk to financial planners, real estate agents, insurance agents, CPAs, and all these people need somebody who knows mortgages, divorce attorneys, especially divorce attorneys, because a divorce can be so complex. If you go to a regular bank, it's not gonna stick. So you got to have somebody who knows what's going on. But that's typically how I get them. Past clients, real estate agents, you build a name for yourself, a good reputation, and people prefer to use you instead of a big bank.
So let's talk about the life of a mortgage broker. Somebody goes to you, and you have a whole range of suppliers, of vendors that can provide money. Right? Versus if they walk into the local bank, what do they do?
So when you walk into a local bank, number one, these are depository banks. These aren't just places where you go for a mortgage. So you'll go into a bank to get a checkings or a savings. So now the regulations, as far as government regulations, change. Those loan officers that are in there, they're not licensed. They're using the license of the bank. And so when it comes to actually doing a mortgage, they're not too familiar with it. They just know, I got to collect your pay stubs and I'm sending that over to underwriting. And so what people typically would do when they go to a bank is they'll get denied. I hate to say it like that. But some people, if you're A paper, you'll get approved by your bank. But when you go to somebody like me who's actually licensed, who understands a mortgage, who understands mortgage lending, their chances of approval increase. They increase dramatically.
And some people think, well, I'm sorry, why go to a mortgage broker? It's going to cost me more money than if I go directly to my bank. Tell us about that.
So it really depends, because in some situations, it'll cost more money to go to a big bank than it would going with a mortgage broker. Because with a big bank, you're stuck with one option. With a mortgage broker, you're going to have multiple different options to actually shop your interest rate, shop closing costs, see what lenders are giving you a credit, which ones aren't. And so you would save more money working with a mortgage broker.
And more options for you.
And more options.
So if you send that over to one of the guys, one of the vendor supplier of money,
right?
They're not a mortgage king, I know that, but you are. You send it over there and they have some objections. You continue to try to work with them, but you also know that you can go to some other places and you'll know some of the questions they might ask.
And that's another benefit, right? Sometimes in the middle of the transaction is when something might pop up. And if you're working with a bank and that one thing pops up, you can't just take your file and bring it to another vendor. typically I can do that in the middle of a transaction while they're already under contract. If something pops up that maybe the buyer didn't say or we just didn't catch, we can typically say, hey, okay, we know what the mistake is now. I'm going to grab this file and I'm going to take it from Windsor Mortgage and I'm bringing it to Freedom Mortgage and I'm going to fix the submission mistake over at Freedom, and we can still close this within 5 days, 7 days, depending on where we're at.
So let's talk about if somebody walks into your office and you say, here are the, I don't know, I'll be nice, 10 things you need. Right?
Okay.
And you go, here it all is, and you look at it, and you go, okay, looks good. Then what's the process and how long until it moves along enough to where your client gets some positive feedback? How long might that be?
It really depends. It all really starts once they get under contract for the home. Because then, some time typically passes. They get pre-approved, they shop for a month, maybe 2 months, and then they're ready. Hey, we're under contract. What do we do? That's when I'll check the file out for them, have them resubmit anything that's probably expired, because that's another big thing. You'll submit pay stubs, and the underwriter come back, hey, send them again. These are from like 2 months ago. So we'll just make sure that everything is up to date, and you'll typically hear what's called an approval, or what we call on the mortgage side a conditional approval. You'll hear it from them in about 48 hours. Once we submit it, you've gotten under contract for a home, we prepped your file, it's submitted, you're going to get a approval within about 48 hours. So
the person that's looking for a home, tell us why they should try to get pre-approval and waiting till they put this house under contract and they haven't started the process.
That's a great question. So just like going to the grocery store, you're not going to go to the grocery store and not know how much money you're going to spend. You want to know, hey, what's my finances? What can I actually afford? And it also strengthens your position from an offer perspective when you go to a seller and you say, hey, I want to buy your home, and they see a pre-approval letter. They know this guy's got his credit checked, his work history.
Does it say how much they qualified on the mortgage?
Yep.
So if it's in Miami, let's just use the figure $1 million, just so that's. They go in, and how much down payment would they need to put down on a more or less on $1 million? More or less.
You can start at 10%.
Okay. So they go to the bank, mortgage broker, mortgage king, and they say, hey, let's process this. They can go back to the buyer, to the seller and say, listen, I just got approved, for a $900,000 mortgage. I'm ready to move forward on your place. That's the way it works.
That's the way it works.
And if they're pre-approved, everything was up to date because they gave you the stuff, and the next day after they got approved, they found it and everything's there. And you say, okay, I'm ready to go.
Yep.
Assuming all the paperwork's right and they've checked whatever they're going to. More or less, how long is it for it to be funded?
About 30 days. Right. Yeah. So there's different third parties that are part of the transaction. You have a title company, you have an insurance company. And so as long as everybody's working fairly well and they know what they're doing, you can close it even quicker than 30 days.
Yeah. And what's your phone number?
786-355-6164. But
there you go.
You can find us at cleartoclosehomeloans.com.
What is it?
Cleartoclosehomeloans.com.
I go right on, and you must be very involved in social media, so they can look around. They can find it under that name-ish?
Yeah, they can find me at mortgage_king_.
So you're pretty active on social media?
I'm pretty active.
In today's environment, that's where a lot of people get their stuff from.
Right. One thing I don't do is I don't dance on TikTok.
So a couple things. We got a few minutes left. What is some of the things that people should be acutely aware of about borrowing money?
I think the most important really is your power to actually pay it back and pay it on time, because you're getting it off of your ability to pay. That's what you're really getting it off of. You're showing the lender, hey, I can borrow money, and I know the implications of not paying this back and what it can do to the economy. I think that's the biggest, broadest picture I can paint is borrowing money and paying it back.
So when people borrow money, they're lending it to them secured by the home, but they don't want the home, they want the money.
Correct.
Not, because God only knows how much it costs for the bank to take it over and then to have to fix it up and then to have to resell it and pay all those fees.
Yeah.
So it's the client's ability to repay the money in a timely fashion, and that the home is just no different than if somebody doesn't pay their card, that tow truck's going to be out there, and I don't know, a certain number of days they're going to take your car. You still owe the money.
Yeah.
All right. So anyway, thank you very much for being here.
No, thank you for having me.
Yeah, and I hope this next year, this last 6 months of next year is really good for you, because when it's good for the mortgage brokers, all right, it's good for a whole lot of people.
Yep.
So Giovanny, thank you for being here, and have a good time.
Thank you for having me.
My pleasure.
Those are great.
Okay.
questions, by the way.
All right. Thanks. And that's where's this camera right here? Why don't you look right in that camera right there, and I want you to thank somebody who's helped you.
thank somebody who's helped me first. I want to give all praises to the Most High. Jesus Christ is King. I want to thank Mike Nehemiah at Clear to Close Home Loans. I want to thank a ton of people that I can't think of right now because I'm on the spot. Jacqueline Gonzalez, I was her assistant when I was very young. George Pereira, I want to give a shout out to you too. And that's it.
Okay. And we want to take that big camera in the sky, put it on Zoni over there. He's going to wave hello. Where is he? That's coming up. Where are you? Okay, there you go. That's Anzoni's working the show today. Again, my brother and I thank you for watching us, and we subscribe to the Disney rule, which is when you hug someone, don't stop until they do. Have a great day.